as well. So you definitely can rock and roll. And like, guys, I'm recording this tonight. So for those who just need to go back and hear it again, because Randy's just an incredible educator. So we want to make sure we capture that. So Mr. Webb, I'm stepping out of the way. You got it, my man.
All right. Appreciate you, Mike. So how's it going, everybody? Hope you are having a blessed weekend and get ready for this 4th of July coming up. For those who don't know me, my name is Randy Webb, and you hear that money sign right there. That's the web analyzer that we're going to get into. But just giving you a little bit of my background.
Hold up, Randy. I think I muted you. Sorry about that. There you go.
No worries. Here we go. Okay.
All right.
So me and my wife, Chairman 25 now, we've been a part of IML for, 18 months now. And just like everybody else, we had no experience trading. To tell you the truth, didn't even know Forex was an industry. We thought it was a company coming over to iMarkets Live. But we've been full-time entrepreneurs now for about 6 years. We were in a previous company where we built organizations up in the 30,000s. And I'll tell you, we're grateful to be a part of this organization, because now we've came over and really grasped this skill that when I do step into a market like somewhere in Africa or even in some second or third world country, that as long as they got internet, we have a skill that we can teach. So I'm going to break down really a strategy that propelled us and our organization to really be successful traders and also successful network marketers. So fast forward now here in iMarkets Live, in the first 60 days of being a part of the company, we hit a rank called Chairman 10. And then after that, I thought I was going to come over to this company. When I looked at the comp plan, I said, man, this comp plan is beautiful. I had already put in 35,000 customers before, so I thought I was going to speed my way to Chairman 500. And life was going to be great. I probably wasn't going to have to figure out how to trade, but I think that God had another purpose for us, and I'm just grateful for the journey, because now that I do understand the skill and I respect it and I know how to do it, I can go into any continent and really teach really what we're doing. So we hit Chairman 10 in 60 days. Had some bumps in between there where we thought we were going to hit a rank faster than or thought I was going to hit a rank really fast. Hitting the Chairman 25 kind of got delayed till about 17 months in. But along that way, I really grasped how to trade, and I came across a strategy with Dr. K. That's what I followed. And I really perfected what she's done. And I've applied what we've learned in iMarkets Live in that academy goal. If I can say that one more time for everybody on here, if you can just commit to go through the academy, unbiased, take notes like a real student, like for real, I promise you when you get through with it, there's going to be a lot of things that make sense to you. I'm going to talk about some stuff here with the strategy. All I'm applying is what I learned in the academy. All I'm applying is a checklist that I learned in the academy. And I'm very disciplined, because that's what was kind of driven into me while serving in the Air Force. So, my background was a C-130 pilot. I flew tactical cargo airplanes as an aircraft commander, deployed multiple times to Afghanistan, Iraq, all type of crazy places. Before network marketing, I was used to being away from my family about 4 to 8 months out of the year. My wife always held down the house. And then in 2013, I believe God had another plan for us. I ended up getting sick, got diagnosed with discoid lupus, and then it changed my path, my career path. But I'm grateful for it, because it's what allowed me to be free. And so, medically retired from the Air Force in 2013, got introduced to network marketing, became a top earner within about a year and a half of being a part of that company. And then, of course, we have been network marketers, and we've now Forex traders for the past 6 years of doing this. So I'm going to plug in and just show you guys really what's been working really good for us, the ECC-11 strategy using the web analyzer. We do it every single morning. Far as the discipline, the checklist, I don't enter a trade without going through the checklist. I know there's someone on here who's saying they can't hear. If you can type in the chat box, just let them know they may have to log off and then log back in to hear.
Yeah.
So what I'm going to do is,
there's just a couple people talking, they couldn't see your video at all.
Yeah, I know I can't. The only way for me to get my video going, I haven't shared anything yet. I'm going to share it. But as far as my video, it's not turning on. But I will share my screen for the web analyzer. Let's see, share this here. Just drop a 1 in the chat if you can see the web analyzer here. So what I'm going to do is go over a clear checklist on how to enter a trade properly. And as long as you maintain this discipline, you shouldn't get caught in very bad trades. And I'll talk about decision points, because they're not every. I know we have been 100% on the Breakfast Club, 100%. But as you know, there's going to be some losses at some point that are going to happen. And so I want to teach you a discipline of when to exit a trade, because I think that's the hardest part for most Forex traders, is they don't know when to exit a point, or they don't have a decision point, which is creating a stop loss. So we're going to jump right into this. So for those who have never used the Web Analyzer before, after this session, if you want to upgrade to the Web Analyzer, you're going to go to your back office. You're going to go to shopping cart. Find Web Analyzer. It's going to cost $21, I believe, to upgrade to it. I promise you it's going to be worth it. We're going to talk about all the opportunities that you can take advantage of using the Web Analyzer. So first things first, in the Academy, I want you to go and log this in your notes. If you haven't already went through the entire Academy, of course, I want you to go through your 100 series, your 200 series. But one of the videos I want you to focus on, it was done by Christopher Derrick. It's under technical analysis, and it's video number 4. And it's called High Probability Confirmation Checklist, okay? And because that's what we're going to apply on top of the knowledge of using this Web Analyzer with the cloud, okay? All right, so first thing, if you're brand new and you're just now getting on the Web Analyzer, you're going to have to choose a strategy. Understand the Web Analyzer has a lot of different strategies attached to it. So you're going to go down to where it says strategy here, and you're going to click on Dr. K's, or you're going to click on where it says choose strategy. Then you're going to find Dr. Kathy Kirkland ECC-11 Strategy. Make sure you save mobile, and then you can also turn on your cha-chings, click on here, and then save settings. It's going to reload your settings, and it should look like this once that happens. The next thing you're going to do is you're going to make sure that your cloud settings are set up properly, okay? So those settings are 6, 13, 26, 13. It won't read these settings as default. So you're going to have to go in and edit. So you're going to click on this edit button here for your settings. For your inputs, 6 for your conversion line, 13 for your baseline, 26 for your lagging span, 13 displacement. And then you're going to go to style. Make sure that you change your conversion line, which we're gonna refer to this as your Tankinson, okay? That's gonna be red. And you're gonna change your baseline to blue, which is called your Kinginson. Everything else is gonna remain the same. Make sure you change to save as default so that you don't have to keep on doing this. And then you click OK. All right, and I know there's probably some questions in the chat box. I'm gonna try to look at those in between, but I know that we're recording, so I'm gonna just keep everything streamlined, and then I'll come back and answer your questions. So know that I'm not ignoring you if you are asking questions in the chat here. All right, so now that we got everything set up, here's the first way to take advantage of an opportunity. You know, me personally, I don't look at the M5. You can look at those because of what the checklist that we are gonna do, but you don't have to have the M5 check. But since the market is not moving as fast, I'm gonna go and click M5 here. And let's just look at the first one that we have here. So as soon as the Web Analyzer gives you an opportunity, you go ahead and click on it. Now I'm gonna give you 4 steps, okay, that we're gonna adhere to. Always remember this. This is a note. It's in your Academy as well. The trend is your friend. They say that for a reason. All right, if you stay with the trend, there are gonna be times that you can go into a pullback, right? A correction of whether it be 20 pips or 30 pips. And don't worry, because of what I'm going to give you right now. At some point, that trade is going to hit. Now, there are several philosophies of traders that either you're going to use a stop loss, and then there's some traders that don't use a stop loss. What I'm going to suggest to you, if you are a brand new trader and you don't understand when I talk about the decision point of when to get out of a trade, then you may want to set a stop loss. Okay? All right, and I'm going to talk about how you utilize the Ichimoku cloud for your stop loss. All right, so we got NZD USD set up here. It says it's a sell opportunity. It gave it to us on the M5. Now, the first thing that I look for, remember we talked about the trend being your friend. When I look at an opportunity, number one, I want to look at the trend, okay? For those who like to draw trend lines, of course, the Academy teaches us all that. You can draw a trend line looking for a downtrend or uptrend. What I'm looking for in that first step is I want to see what my overall trend is. Is it an uptrend overall, or is it a downtrend overall? Now, when I say overall, that means all of my charts are either in a sell for a downtrend, or all of my charts are either in a buy for an uptrend. If that's the case, I'm going to look at that as a high probability trade, okay? So here's how we look at it on the cloud. You don't have to draw any lines on the cloud. That's what's powerful about the Ichimoku. It stands for quick glance the Japanese created so that you can analyze your chart in less than 1 minute. You can look and see the trend. You can look and see the support and resistance areas. You can look and see if it's a buy or sell. okay? And if it's rejecting off a certain area, just based off a quick glance. So now I don't pay attention really to 5-minute charts, so we're gonna go to the M15. You can write this in your notes. We're gonna look at the M15, we're gonna look at the H1, we're gonna look at the H4, and we're gonna look at the day chart, okay? Now, if you're brand new on here, after the M15, so you see this 15-minute, that means that each one of these candles are 15 minutes of time. So this would be 15 minutes, then it's another 15 minutes, which would be a total of 30 minutes right here. Then you have the 4 15-minute candles, which will be an hour. So when I look at my hour candle, guess what? This is gonna be one whole hour right here. So on the 15 minutes, you can see that's a downtrend, correct? Okay, so on the 15-minute chart, we're in a downtrend. Why? Because price currently is below my cloud. So anytime that your candles are below the cloud, it's going to be considered in a downtrend. Okay, so on the 15-minute chart, we're in a downtrend already. Now, as you go through the academy, I'm going to tell you. So you're going to see me do some things here. Don't worry if I don't teach it to you. Don't worry about it. But for those who have gone through the academy, you're going to have some more breakthrough of how this works. So if you follow Stevenson Lindor, you follow any educator that does market structure or flag formations, you're going to see that the cloud adheres to flag formations as well too. So you can see we have an impulse, correction, and what comes after a correction is a continuation. But now let's look at our trend. So on the M15, we're in a downtrend. Now I go to my H1 chart. Okay, perfect. We're in a trend down. It's below my cloud. Let's go to the H4 chart. Okay. All right, on the H4 chart, it's not past this cloud yet. Now, for an experienced trader, you're going to understand that you just need to wait. You see that this red line is crossing below the blue line. Okay, so this is an indication of a sell, but anytime that it's above the cloud, it's considered a weak indication. Now, I want to go into, I can't say that it's guaranteed, but I want to go into high probability trades. I don't want any room for my price to reject off of what I thought was going to be a sell. So right now, the reason we're halting here because we went through the M15, H1, and then we got to the H4, and it's now above my cloud. So here's what's happening and how the cloud works. You see this right here? This is called our Kumo. This is the cloud, okay? We use it as a major reversal area, which we call it MRA, or support and resistance. So the algorithm of how this cloud forms is giving us future points at which there will be resistance or support. So right now, long-term on the H4, this is a reversal area. So you see that price, you see how price is hitting against the cloud, but it's respecting it. So this is one retest. This is two retests off the 4-hour chart for this area. So it's likely that this can possibly reverse. So we don't want to go into a sell right now, but let's just talk through this one. Now, once this breaks, what we call this is a ECC-11 A. Now, this is just me. This is a lot, way more knowledge. So this is just extra stuff. I'm giving you stuff that you can research, however, as you get more into the strategy. Okay, so this is called a ECC-11 A. This is called a ECC-11 B. You don't have to know this, but I'm just giving it to you just to have more information. What it does, it makes up the entire cloud, okay? And it basically makes up the trend. So anytime that you see a trend up like this on our 4-hour chart, we have an uptrend. So what that means for our 15-minute and 1 hour is that those are pullbacks. So we have an impulse, correction, continuation, correction, continuation, correction, so forth, continuation. So you've seen this on the 1 hour. So here's what's happening. We're at the bottom and it tapped this cloud, so this may reverse back up. But have we seen the price here? And then we go to the day chart, last one, and we see that it's below the day chart. We validate our sell. Now, what I'm seeing here as an experienced trader, you may be able to say, you know what, I'm willing to go into a short-term sell because I do see that possibly if that does break, you know, on the 4-hour, at this point, I can grab my 10 or 20 pips or whatever I want to get here, especially because I see this dip in the cloud. Anytime that you see any type of dip in the cloud, it's an indication of a pullback, right? So if you look here, you see dips here, you'll see where price pulled back and then came back down at some point. So for the simplicity of this strategy, we're not going to take this trade. It's not a high probability trade for us. So we go to our next one. It called for a buy on GBP AUD, okay? So I'm going to walk us through the steps again. All right, so immediately looking at this is in the cloud, so I'm not going to trade it right now. However, let's talk about it. So we're going to look in the 15-minute because this will pop up. So 15-minute chart. First thing we're looking at, trend, M15, H1, okay, above the cloud, great. H4, not above the cloud yet. And then let's look at the day chart. Not above the cloud yet. So this can possibly be just a pullback. So I need price to continually to move up. So as a high probability trade, we're not going to accept this one. Let me go try some more. And if not, I'm just going to go straight through the checklist just to give it to you. So EUR-AUD, let's take a look at this one. M15 is below the cloud. Let's just still look 1 hour, mid cloud, and 4 hour below the cloud, and day chart. Kind of above the cloud. So here's what we're gonna do. I'm gonna just go back to the first one, and we're gonna walk through the full checklist as if, and I'm gonna tell you what you're actually looking for. So we'll go back to NZD-USD. They're calling for a sell for that one. So here's the first thing I want you to do. We're gonna act as if this is gonna be a good one. So first thing, I want you to take the horizontal line, okay? Right here. Click on that, put it somewhere around where price is currently at. You're gonna click on it, okay? We're gonna put the price that it says right here. So it says 0.66722. Okay, so now my price there. Here's what happens with the web analyzer. It's programmed to put price at a support and resistance level. So as you can see, what I mean by support and resistance, if you haven't went through the academy yet, or you plan on going through the academy, anytime I say SR or support and resistance, a floor is support. That means you're walking on it, boom, support. So you see the candles, retest, 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 retest. This was a nice support area right here. And then price eventually broke through, and then it became resistance. Retest, retest. It's now resistant. Price fell, came back up, tested again, came back down, came back up, tested again. It's definitely a resistance area now here, okay? Then price finally popped above. It became support. So this is a support and resistance area, which our flag is going across. Anytime I say flag, that stands for a correction or a pullback or consolidation. Those are the same exact terms, okay? So you don't get confused with that. So here we are. We're looking for the sell opportunity. All right, so now you got your line set. Now we're gonna look for our trend. We've already done that. M15, H1, below the cloud. We're looking for everything to be below the cloud. So we're just gonna make an assumption. If this was below the cloud, right, this will be looking good. And then we go to our day chart. And we look for our day chart to be below the cloud as well too. Okay, so let's just say all of this was below the cloud. We have a good opportunity. Now I go back to the M15 chart, okay? And so number 2, we are looking for support and resistance areas, okay? Now remember, the cloud is a support and resistance area, but the web analyzer, this is what's powerful about this software. It is already giving you the critical support and resistance area. This line right here that it gave you, it said, okay, this is hit across this point several times. This is our area of entry. So what you want for a sell is you want your price to be below this line, because this line is going to be our resistance point for a sell. And if we were looking for a buy, we want it to be our support point, and we want it to be our floor. So right now we are using it as resistance, and price is also below our cloud, okay? So now what we're going to do is the next step, number 3. We're looking to get in on the pullback. So we want to make sure that it's already in the pullback. Guess what? We're in the pullback. This is a correction right here. The reason I wait to get into a pullback, because I don't like to get caught in negative trades for a long time. I want to make sure I already get in on the pullback that's happening. Okay, so this is what we call a pullback, a correction, a flag, a consolidation. It's all the same term. So here goes our flag. Here's our pullback. Here's our support and resistance line. That's our number 3 step, right? And our pullbacks are our number 3 step. Now we're looking for 2 to 3 retests to solidify that this is a correct support and resistance area. We already have that going across. So we have our 2 to 3 retests, that check. So the next thing that I'm looking for to enter this trade, number 4, is that price starts moving in the direction that I want to trade in. So what I'm looking for here is for price to reject off of this resistance zone and start giving me a bearish candle that breaks here. Now, for those who understand trading flags, you're also looking for a breakout, right? You may get that breakout and then it come back and retest. But for 10 pips, we're just looking for a quick rejection. Soon as price lights up, starts moving in the direction of travel, I execute the trade for a sell, and I'm in for 10 pips. Now let's go look at visually what 10 pips look like. So our entry point, let's say that we came off an entry point of 66721. So let's say entry point may end up being 710. So we're going to take this down to 610. So right about here is my 10 pip point. Right, so we'll call that our 10 pip point right there. So this is what we look for. Now, I want to make sure that I can even get the 10 pips in. So I'm going to now bring the money line into your view. All right, see this green line? We call this the Chico span, the lagging span. All this is, it confuses a lot of people. You'll hear taught where this will show you what's going to happen in the future. All they're telling you right now is this is going to be able to tell you where previous support and resistance levels were. All we do is we look left and we see where our next point of target is going to be. So this is our next point of target because this is where you see kind of price reverse that. So anytime you see price move backwards, this is going to be a point of interest. So you see price moving down, most likely it may tap here and it can reverse back up. And then I'm going to go even farther. I want to see if I'm going to be able to hit my 10 pips. So I'm going to take it down to our 1 hour. On the 1 hour chart, I look left. You see this green line here? You take that, you look left. Here's our first target of interest, but then we're going to look even farther left because I want price to pass that point. Now I go to farther left, and we knock into the green line. You see that? See that point right there? You see that hook right there? Not a coincidence. This was a point of reversal right here. So we're going to track it down. So pull back there. We're going to track it all the way down. Here's our next point where price, you'll see where price kind of pull back right here. So that can be your next target. So we can get 10 pips here. And then we can take it down even to this point. And then you can see there's going to be some heavy consolidation that's going to happen again. You may be asking, well, how do you know that? It's not that I know it. We just know that price repeats itself. So all we're saying is most likely this is not a guarantee. This is just us analyzing the chart saying that this is likely what price is going to do based off what it did in the past. Okay? So that's how we're able to kind of to forecast that. Now I can even go farther and see what it did on the 4 hour. Now on the 4 hour, I go do the same thing and we go to this point. So you see how critical this is? On the 4 hour chart, even shows you even more. So what can happen is once the price reaches here, guess what it's going to do? It's going to pull back to this point. Well, guess what it's confirming for me? It's also confirming that because when price breaks here, we see this cloud forming. But when I start seeing my Kumo twist, this is a Kumo twist right here, by the way. When I say that. Anytime you see a Kumo twist, it is an indication. Listen to me clearly. Indication, not a guarantee. It is an indication that price is going to reverse, meaning you see it was a downtrend here, okay? Then you see price, you got a crossover here, boom, boom, boom. It's telling you the story. Now price is in the cloud. We're not trading here necessarily yet, but then in the future, we see that our twist happens. This lets us know that price is going to change to an uptrend now. And that's what happened. Price was coming down. Then price changed to an uptrend. We got our Kumo twist. So guess what we're going to look for here? If we're expecting for price to come down here, we'll look for this Seiko span to connect with Seiko span A to connect with Seiko span B to cross. Once this crosses, this is high information stuff right now. I'm serious. Once this Seiko span crosses, it just gave me indication that there is a trend change that's about to happen on my 4 hour chart. I'm not going to jump the gun. I'm going to wait for price to break the Seiko span B. And right now, if I'm over your head, don't worry. This is well advanced right now. Okay, so I want you to go back to this video and just kind of dissect what I'm talking about. Okay, so anyways, when the price breaks this point, and then we start seeing that this is forming a downtrend, we are looking to at some point enter this trade or getting ready for the setup. Okay, and then obviously on the day chart, you can see that there's a dip in the cloud. So like I said, this is not a high probability trade, so I wouldn't suggest if you're a new person to even enter this trade at all. I just want you to understand what we're walking through right now. Okay, so let me go back to the 1 hour because we can see it there. So once again, we got our retest here. What is price doing? It's now moving in our direction. So if we wanted to sell for 10 pips here, we could sell for 10 pips. Now, if the pullback happened, here's the greatest part. Now, I'm not telling you when to sell for 10 pips right now. this is not a good trade because of the day chart. But what would happen, this breakout at some point will happen. But let's say worst case scenario. Let's say you enter for this trade and the pullback happens. More pullbacks happens here. So what you're going to see happen is this flag is going to keep on forming. This is called a Kingensen. It's also called the baseline. Most people use this as a stop loss line. So what you do is price will always come up, tap it, and then reverse back. So it's considered, when price is below, it's considered a resistance area, and when price is above, it's considered a support area. Same thing for your conversion line, which we call the Tankinson. So I call this my moving support and resistance lines. All right, price is going to respect these lines. When price goes above these lines, now we need to start looking at price. You got to let the market do what it's going to do. Price is going to go in another direction possibly. So we have several layers, however, right now for us going into a sell. This is why I call this high probability. You see, when price is below your Tankinson and your Kingensen, and we're looking for the sell, let's say price does reverse. What I'm expecting is price, if price doesn't respect my Tankinson, price is going to respect my Kingensen. If price doesn't respect my Kingensen, my last resort is my cloud here because it's below. Now, looking at market structure, for those who understand market structure, what am I showing you without telling you about it? Here is our first higher. This is a high, right? This is now creating this is my low. This is my lower high. So what happens with market structure, let's say price reverses on us. Long as price doesn't go above this point, we are still within structure of a downtrend. Okay, so if I draw this line here, this trend line, you won't have to do this because this is how powerful the cloud is, but I just want to show you for those who know how to draw the trend lines. So let's say price pulls back. Either it's going to respect this part, right? You're going to see it come up here. This will scare a lot of amateurs out. Price goes above, you see the long wick, and then it comes back down. This is also a teacup, right? I can put so much stuff in here that you will start understanding as you see the cloud. It's all wrapped in one. But most likely, because we see this pull, you see this dip in the cloud, this is already letting me know, hey, it's going to pull back at some point, right around here. So I can expect a pullback. And so I'm just going to wait it out and make sure that I have proper entry so I can go directly into profit, or the pullback may happen. Boom. I don't get scared if I got in the trade. Boom. It respects either my trend line or respects my cloud. Here's the part. As long as it doesn't break this part here, I am still within the downtrend and I'm still within structure. That's what matters. You see how this aligns right up, this higher high aligns right with this Seco span B right here. You see that? Anytime you see a flat, so an indication of consolidation. So price can even come all the way up to this point, tap it, and then drop down. That's what it will do sometimes. All right, so just a little bit extra. So let me go through the checklist one more time. You see an opportunity. Number one, you put your entry point out, right? What the web analyzer told you to do. And also you look at the trend, M15, H1, H4, and then day chart. Make it for a sell, you want all the candles to be below the cloud. For a buy, you want all the candles to be above. That's number one. Okay. Number two, we're looking for our major reversal areas / support and resistance lines. That's already given to you with the initial entry point that the web analyzer gives you. So that's your first one. The rest is your Tankinson, your Kingensen, and your Kumo. Okay. So with the Tankinson, when we're looking for a sell opportunity, we want before we enter, okay, this is especially for our amateurs, if you're your first time trading, you want price to be below your Tankinson and your Kingensen for a sell, okay? And then you want, at least in the past, at some point, you want to have seen that the red line crossed below the blue line. So that happened here, and you can see where price respected it, gave you some pips here. Then it pulled back and what? Retested that Kingensen, dropped back down below our Tankinson and respected it. Retest, retest, retest. Boom, price moving our direction. We would have entered here. And then boom, guess what we have? Red line crossed below the blue line again. And then you've seen that major drop here. Boom. Then what do we have happening again? Just what happened up here. We have our correction. Okay. Price is pulling back. We're letting it do its thing. Okay, so we already got our support and resistance areas that we are looking for price to respect, which is number 2. And then number 3, we're going to see where areas it retests. So we look for 2 to 3 retests before entry, and then price moving in the direction that we want it to move in. And we also want price to close out below our suggested entry point. Okay, we want to also get in on the pull back. That's number 3. 2 to 3 retests, enter off of the pullback. Number 4, we're looking for price to move in the direction of travel before we execute our trade. That's it. That's the strategy. That's all I do every single morning. And right now we've been 100% using the strategy. Any person I get in front of, I teach them this, they start doing their own. They start doing their own trading off of the web analyzer. You don't need anyone to after you learn this, you don't need anything except the web analyzer, and you can trade all day long. And so personally, I'll trade throughout the day. I'll throw trades to my team. What I suggest to you, only trust trades with verification. Now that you just learned this strategy, when people are throwing out a trade to you, you can now use the cloud, as a high probability confirmation checklist now that I just gave you those 4 steps. So I don't care who throws a trade. If I throw the trade, if Dr. K throws a trade, if someone on IML TV throws a trade, I was growing up as a pilot, right? I was a young lieutenant. One of our things was you always trust with verification, meaning I'm not going to trust anything you tell me until I verify it physically. So if I say sell, GBP AUD, then I want you to, your first reaction is to go through that checklist. Okay, what's the trend? All right, cool. I'm in a downtrend, so I'm looking for a sell opportunity. I'm only going to trade with the trend because I want to be safe. I don't want to get caught and lose my money. All right, if they call a buy, boom, it's in an uptrend. I looked at all my charts, that checked. Okay, cool. All right, did my red line cross above my blue? Boom, that checked. That's good. Okay, did I get the 2 to 3 retests? All right, I see that. That's a good support area. Boom, that checks. Is price moving in the direction I want to trade in? Boom, that checks. Okay, cool, I'll enter that trade. At some point, you're going to get so good at running through that checklist that you will be able to analyze a chart in 10 seconds of someone throwing a trade out. And so you can take other people's signals, right, trade ideas, but you are still verifying the information. And so I promise you this, if you can be disciplined with that checklist, meaning if the trade doesn't, if you don't see every one of those things on the checklist, okay, on the day chart, it was above the cloud, but everything else was below the cloud. Don't enter the trade. Have the discipline. Only enter the trade when it meets all your checklist items, and you will throw successful trades every single time. So I'll tell you, over the past several weeks of using this strategy, personally, my personal record using ECC-11, using this technique, is I did 71 trades total, and I've taken a total of 3 losses that I had to just close out, okay? So of 71, I've only taken 3 losses using the ECC-11 strategy and high probability confirmation checklist. So that's it. What I'm going to do is look at any questions that I can answer on here, and then we'll go from there. 2 red lines. Where do you see right now? It's only 1 red line. If you're seeing the second red line, the other red lines, that's connected to the cloud. Okay, that red and green line forms what we call our Kumo. Okay, that's your cloud. So you don't have to worry about that line, but the red and blue line, those are your Kinderson and Tangerson. The Tangerson is your red line, which we call your signal line, and the Kinderson is your baseline. We call that your stop loss line. Okay, so let me go ahead and give you the philosophies on stop losses. Okay. So there's several philosophies. Understand, let me just give this to you straight. I remember blowing, and just like if you're brand new on here, I remember being so frustrated to the point I wanted to quit when I first started. So if that's you, where you're like, man, I've blown 2 accounts, 3 accounts, whatever it is you've done, trust me, there's hope, because that was me. And I would see people being successful in this, and I would get in and I would blow an account, and here's what I ended up going through a book called Trading in the Zone by Mark Douglas. You can buy the book, or you can go to YouTube and listen to it for free. It's Trading in the Zone by Mark Douglas. And I remember that whole book was telling my story. I remember sitting on the couch after my second blown account, so frustrated. My wife, she knew. She was like, I'm not gonna talk to him today. It's not a good day. And I listened to that audio. And as I was listening to the audio, one of the first things that really stuck with me, he says that Forex is not here to make you money. Forex is here to take your money. And I said, what? And then he goes on to talk about more of the mindset about trading. He goes, one of the first things you have to understand when you become a real Forex trader is you have to accept the responsibility that any trade that you enter is your responsibility regardless. That no matter what happens in the market, it's your responsibility, because you have to understand right now that Forex is not here to make you money. So if you know that off the cuff, then what should you do? Proceed with caution. How do you proceed with caution? You stay disciplined on what it takes to enter a trade, because you know that there are other people on the other side of your trade trying to take you out. Whether that be your personal broker, whether that be whatever you want to call it, market makers, or whoever's out there with more money than what you have. The market can get shifted in so many different ways. So the only thing that you have on your side today is leverage. Listen to me. The only way that you'll ever blow an account is over leveraging your account, period. There's no other way. I don't care what the market makers do. The only way that you can blow your account is over leveraging your account. That is the only way I've ever blown my account. It is not until I started hearing and being disciplined that I stopped blowing accounts, that I became a profitable trader, that I could sit in a trade, that if a trade that went another way, that I could sit in that trade for a day, 2 days, and be all right and come back and hit my TP. Why? Because I stopped over leveraging and I started being patient and allowing the market to do what it was going to do, and then I would react to the market. This is not a market that you are proactive in. We don't go proactive and enter trades because we want to trade. We enter trades based off what the market is going to give us, based off those 4 steps that I talk about. So when you start taking responsibility, that is the day that you will become a Forex trader. That is the day that you will become a profitable trader, okay? Next thing, patience is key. What do I mean by that? This market, Forex, stocks, commodities, whatever you want to call it, whatever you are trading today, you heard Warren Buffett say that these type of markets are set up to pay the patient and take money from the impatient. Meaning, look at this trade. Now, I'm going to give you a prime example. We could have easily entered this trade based off what I was talking about. But once again, we are waiting for what? We're waiting for it to start moving in our direction before we just enter a trade. Now, could you enter this and be all right? For the most part, maybe you could enter. It may be a sloppy entry and it may hurt a little bit. You may hit your TP, but that's not what we're looking for. If you want sharpened entries, you want almost 100% record where you're not going into bad trades, then apply that checklist, apply the discipline, and let it wait out. Anytime you're on my breakfast call, you'll realize that we take some time before we enter 2 or 3 trades, but they're high probability trades when we do get them. So that's it. So I need you to be patient. I need you to be disciplined. And that discipline includes not over leveraging, okay? Using the proper risk management. Now, another thing that I also utilize is I have a spreadsheet, the 90 trade spreadsheet. And on mine personally, I don't use 10%. I know some use 5%. I'll use 3%, sometimes 2%. So it allows me to be in trades for a while. Now, I'm telling you that because losses. Okay, here's the philosophy. I used to set stop losses. Okay, I did. And what I realized, there were some times where the trade would literally go wick me out. So let's say I would set my stop loss about 10 pips above the blue line. So this is the way that I teach it. So this Kensington is used as a stop loss. If you go look on the internet, you're gonna find all over the internet the Kensington is used as a stop loss line. Well, guess who else knows that information? Market makers, whoever you want to call them, someone with more money than you. So they know that anyone who's using this strategy, your broker, they understand you're going to set your stop loss 10 pips or somewhere around this point. So you'll see where literally this happens. Boom, takes your stop, or you'll see something like where it goes above the blue line, comes back down, hits the TP. And so personally, I don't set stop loss, but I have decision points. My decision point is continues up, then if I'm looking at this, it busts past this point. Sometimes it'll just wick this, but if it physically busts past this point, it's now both broken market structure. I'm no longer in a downtrend. So that means the trend is going to change and start going up, and I might be in that trade for too long, so I'm not willing to go into the negative that much to get that trade. Okay, so that's what I do personally, is I look at market structure for the trend, for my decision points. Now, if you are going to set stop losses, there are several things you can do. You can still use this Tennyson, so at this level off point, so anytime you see it go straight like this, which you can see the consolidation here, you can set your stop loss 10 pips above this point, so 87. You would take it up to 67, somewhere around this point, which still brings you to your previous high pretty much. So this will be your stop loss area if you absolutely have to set a stop loss, or just use proper risk management and leverage the proper way. Don't try to get a gang of money off your first trade. Use 3% of what you have in your account, or use 2%. And then we're just going to chip away at each of our trades, 10 pip trades or 20 pip trades. Okay. Well, that's pretty much it. That's mindset. That's and then that's entering and executing the trade. All right, let me look at the rest of your questions here. So you said when securing your first 10 pips, then you can go back in for your second 10 pips. So here's what I'll tell you about re-entering a trade. And I'll tell you this from experience. And I'll tell you, I've made bad decisions doing this. I would enter a trade. I would knock my 10 pips out fast. Boom. Boom, done. And you know what the urge is to do? Let's go in again for another 10 pips. So here's what I'll tell you. When you're looking at a trade, still go anytime that you enter a trade. I don't care if it's the same trade. You're going to go through the checklist every single time that you enter and you push the sell or buy button. So when you enter, you get 10 pips done. Okay, let me go through my 4 steps again. Now, the only thing you're going to have to go through your 4 steps, you're going to go through it physically in your head, trend, MRA, 2 to 3 retest, pullback, and then price moving in my direction. So what you're really looking for when you go to re-enter your trade is your pullback. You're waiting for another pullback. No pullback, no entry. You'll save yourself the heartache of making profit, and then what? You enter the trade again without going through the checklist. And then what do? You blow all the profit you just made because you got caught in the pullback that we were trying to avoid. So only enter in on a pullback, okay? So that's what I would suggest for re-entering a trade when going for 10 pips. Okay, you said red and blue lines and not the green. Okay, perfect. Okay, when you said so I get in on the candle that is pulling back and finish for the 15 minutes, or you are saying no. So you're gonna wait for the pullback to happen, and then you're gonna enter on for the sell, we're gonna enter on a bearish candle. Okay, so your pullback is going to be obviously here for this purpose. We have green candles, right? So that's our bullish candle pulling us back, right? Get our pullback. And then the next candle that lights up, we're looking for a bearish candle after our 2 to 3 retest of our area here. So if it's going to respect this area, we get 2 to 3 retests. So let me go that back. And you're going to base this off your 15-minute chart. So let's look at what happened on the 15-minute. So as you can see here, if we look closely, you see where the red line crossed below the blue line? This is an indication of a sell. Now, however, we want our price to also be below the red line. We want it to be below the red and the blue line. So what you're seeing right now, price is currently trapped actually. So price is trapped between our blue line right here. And price is also trapped between our Kinderson right here. So price needs to make a decision. We need price to bust past our red Tankinson, and then we can enter in on this trade for our sell here. Now, like I said, we're doing this for this purpose. Obviously, all of our charts are not below the cloud, so we're not going to enter for this trade, right? Because what you're really seeing is if I go here, you see how I just trap price between our Tankinson and Kinderson. Look what happens when I go to our 4-hour chart. Hopefully, it'll all make sense for you. Let me delete this line. And you see price is literally trapped here on our day chart. Okay, and then this is our entire flag on our 4-hour chart. So we're not going to enter this trade here because you'll be basically trading the flag if you try to enter here, and you don't want to do that. All right, look what happened. Price made a decision and it started moving up. So This is what happened. We didn't enter this trade yet, because guess what? It may come up to this point, which it probably will. It's going to come to this point and then drop back down again at some point. But at some point, we're going to get our break, and then we're going to be looking for entry once it breaks through that day chart and the 4-hour chart. So if I didn't give you these notes yet, anytime that you see the red Tankerson and the blue Kinnison, so anytime you see the red Tankerson cross below the blue line, below the cloud, it's a strong indication of a sell. Anytime that you see the red line cross above the blue line, above the cloud, it's a strong indication of a buy. Okay. Okay, I believe if I didn't answer your question, please feel free to ask the question again. But hopefully I covered everything for everyone. If you need me to go over anything else, again, please let me know and we'll go over it. But this is all we do. This is how it works. Now, if you want to upgrade to the web analyzer, like I said, make sure you go to your back office. You're going to go to shopping cart, and you're going to just go add on web analyzer. And then you'll get this. To get on the Breakfast Club call, you have to have the web analyzer as an add-on. Okay, yes, I'll go over the green line and I'll go all the different lines, the money line. Okay, got you. So we're going to talk about, I didn't clarify this a lot. So let's go over what we call the Chico span. Okay, for those, maybe you might be a long-term trader as well too. I'm going to show you how to use the cloud with the web analyzer for longer-term trades as well too. So this is our Chico span right here. Okay, lagging span. And I'm finna hopefully this might be a breakthrough for some when you look at what this really is. So we're gonna focus on our money line, this Chico span, lagging span here. So what is it? What is this Chico span? It's just your candles, right? You'll hear the definition is 26 periods in the path, blah blah. That doesn't matter. Here's what matters. It is your candles. See these lines? It's the same exact line, okay? So it's allowing you to be able to glance at this really quick and see your reversal area, okay? So here goes my previous high here, right? So if I was just coming down, this is a point here, right? This is a point here, so forth. So now that we know this, it's basically our candles. So when I'm looking at the Chico span, I'm just basically setting my target point. So let's say we were looking for a long-term trade, and we're looking for a sell opportunity. Anytime I'm setting support and resistance areas or MRAs, major reversal areas, I'm setting them at points where price, reversed that. So let's look here. So price, you can see price reversed here, then also price tapped against here. So this would be a nice support and resistance area right there, okay? Right there. Then we're gonna do it again. Come down, let's see. This could be a reversal area right there. We see that pullback happen there, okay? What you see this? And then we had our major reversal right here, okay? So if I was looking, let's say that price finally broke from this point, okay? You enter this trade. You get your 10 pips. First target, 10 pips. Second target would be this one right here. Okay, this is going to be the point where a possible pullback will happen once price does break through. So our second target point would be 0.66324, right? So you can level off, so you say 0.66350. So that will give us, let's say that we did enter somewhere around this point. It breaks through here, it retests, we enter our trade. We're looking at a 60 pip potential here, right? Boom, hits here, pulls back. We get on our pullback again. Now we look at our third target here. Now we got 6598. So you have the potential to get about 70-something pips knocked out here, okay? And then, of course, down to this point here, you look 6561. This is a total of 100 pips between this point here. So even if for those who swing trade, this is easy to look at. We can see, for me, it's like the matrix. I just see the trade happening. Okay, I'm just looking for proper entry. But boom, you had the potential to hit 100 pips here, and then you can see major pullback happens here. But down to this point, 100 pips. If you're looking for short term or long term. Okay, cool. Yeah, hopefully Wayne, that gave you how to go into that. You don't, okay, no, we do 10 pips and dip. I'm gonna show you the difference. I can do all type of trading. So I've spent time as a swing trader because I'm still a swing trader as well too. I can look at, without even putting anything, without looking at the cloud or anything, a naked chart, I can do a trade long term and sit in it for a couple days or a week, right? Swing trade, long term, 100 pips or so. However, what I realized, because I had a lot of scalpers on my team, and of course, brand new folks, a lot of people are not trying to sit there for a couple days without seeing profit, and let alone sit in for a couple days in negative. And so I learned off necessity how to scalp trade, but then I also learned that you make more money scalp trading. And so I'm going to show you why you make more money scalp trading with the compound effect. So there's a lot of different versions of this Excel sheet that you're going to see, but I'm going to go ahead and pull it up here. A 100 pips compounded is different than 100 pips straight. So you can do 10 pip trades compounded versus 100 pips. And I'm going to show you which one makes more money. So this will alleviate, this is how folks are taking small accounts like $100 accounts, and they're doubling those accounts within that week by compounding the money versus being in there long term. Now, on the same note, there's times where you can get a good entry and still go for 50 pips or more. You know, you lock your 10 pips in, then anything beyond that is absolutely extra. So that's what I like to do. If it takes me out 10 pips, no big deal. I don't get the rest of the pips. But if that joker keeps on moving, woo, I just got me a free extra 40 pips or whatever pips I got after my 10 pips. So now I'm going to show you how to do a trailing stop once you lock your pips in. And then what a technique I like to do, profit is profit. As soon as my trade goes 5 to 6 pips in profit, the first thing I'm doing is I'm securing my money. I'm taking my stop loss and I'm putting it in profit immediately. Remember, I'm going to give you the mindset that's screwing a lot of traders up. I know, because I was that person. I was the person who blew accounts because of my mindset. I blew accounts because I wanted to stay in. I was at 9 pips and I wanted to stay in and get 10 pips. I want you guys to really think about when I say this. I stayed in a trade. You know, I didn't have a stop loss in place because I wanted to get 10 pips instead of 9 pips. What is the difference? If you see 9 pips and that thing is struggling, I close my trade out, folks. I'm not gonna lie to you. I see my thing struggling at 9 pips, boom, close, in profit. I don't care, right? Because I'm getting my 10 pips or my 9 pips, and I'll make it up on the back end. I'm dipping. I'm out. Okay? So I'm gonna show you this chart here. It's still uploading. Here we go. But that is the mindset of trading. Because why am I saying this? I did what you did. You were in a trade. It was all blue. You were happy. You're like, all right, let me try to get this extra 2 pips in. And then the trade reversed on you. And then what, you kicking yourself like, man, I should have closed it out. I should have did this. I should have did that. And it should have don't help us in profit. So truth be told, anytime that I see profit and I'm comfortable with that profit, I close my trade out. I don't have to get the full 10 pips. I will close it out at 8 pips, 9 pips, or I put my stop loss at least in profit at 5 pips. So if it does spring back, boom, knock me out of 5 pips. Guess what I'm going to do? I'm going to look for another entry to get my other 5 pips. And that's it. I never get caught in a bad trade. Sorry, folks, it's still taking a while for my spreadsheet to load up here, so that's what I'm waiting for. In between that, I'll still answer some questions. Like I said, a majority of this is going to be mindset, folks. That's all that trading is. You know, I know there are some great traders out there that, and this may be you. I know I'm going to talk to you because I talk to me. You are a great trader. You are a phenomenal trader. You've already went through the academy. You already know the basics. You already understand market structure. And you're probably asking yourself, man, I'm good. I understand all the stuff he's been telling me. I do understand the retest. I understand the pullback. I understand all that. So why are you not in profit? Mindset. That's why. There are some phenomenal traders out there who are having a hard time trying to profit their accounts. Listen to me. You're probably wondering, like, how are they phenomenal? There are some phenomenal traders out there who are blowing accounts, who know everything about trading, but they're not in profit. Why? Discipline. Only thing that's going to hold you back between what you want out of Forex is your discipline. And one thing that I've gained over the years is it's been beaten into me as a soldier, right? Discipline. And so no matter how good it looks, no matter how great the trade looks, no matter how confident I am about a trade, discipline doesn't matter until you need it. Listen to me. Discipline, need it. See, discipline only counts when you have to use discipline. Meaning that time, because it's easy to talk about a diet, fitness, right? So discipline does not matter. Let's say that you are on a strict diet, okay? It's easy to be disciplined. It doesn't count until you get around people who are not disciplined. Hear this, okay? So now I get around my good friends and a barbecue's happening, man. And I'm telling you, because I'm a plant-based guy. So, you know, I'm primary, I'll say 90% plant-based. I don't eat any red meat, no pork. May have chicken here and there. But get around friends. It's a barbecue happening. Man, the food looks good. Oh, man, that's awesome. My discipline does not count until I have to say no. Okay? Your discipline doesn't count in the market until you have to say, ooh, this trade looks so good. I want to hop in right now. Okay, I'm not going to get in because it doesn't mean everything. Okay? They called it. Yeah, they called it on swipe trades. Yeah, they called it here. Yeah, it was called on here. But it doesn't meet my criteria. So I'm not going to enter. Yeah, this top trader just called it. And I know this person always goes to profit. Discipline does not count until you have to use it. Okay? And if you gain discipline, it's game over. So that's the difference between your account being in profit and your account not being in profit. It's maintaining that discipline. Okay, so I believe I'm still waiting for this sheet. I'm telling you, my computer is playing around with me today. Let me try to bring this back. There we go. It's it. I got it. Okay. All right, this is your trading plan as well, too. So whatever you put on here, you follow. So like I said, I like to use 2%, 3% most times. So if you have a $1,000 account, and most time I'll tell you I probably use 1% most of the time because I do a lot of 0.10 lot sizes. So I'll always restart my account, $1,000, or you can start an account with $200. All up to you. Let's say you start with a $1,000 account, okay? Now, when I first came in, I'll tell you this is one of the reasons why Forex traders fail. Unrealistic expectations, okay? So I'm telling this is for leaders, for builders, okay? Because as builders, we're going to have the urge to oversell this thing, thinking we have to oversell it. You don't have to oversell Forex at all. I'm going to show you what's realistic, and I'm going to show you what can be done, yeah, but it's also unrealistic. So we can put 10% here, we can put 20% daily growth, whatever, okay? But realistically, what the average person who comes in can do, right? They can do 1%. I want to change your mindset here. Let's put 1% here, okay? And before we start talking about here, let's talk about the mindset. And Mike, let me know if I'm going over. I know I've been talking for a while. If we need to end the call, you just let me know.
Man, you rocking, boy. Keep rocking. Woo! I'm over here fanning myself. I'm on fire.
All right. So let's talk about mindset. You just joined one of the best companies in the world, one of the best platforms, academies, teach you everything from ground zero. I know that because I'm a student and I'm one. I didn't know how to trade at all. And now I'm teaching people across the globe how to do what I do, okay? And so now, but here's the mindset shift. When I came in the company, I was sold on, man, you can make a lot of money, which you can, right? You can make millions, you can make thousands. But what happens is when you sell that at the beginning of your talk with someone, you've now gave them an unrealistic expectation when they come in, no matter what product they use. I don't care if it's Gold Cup, ECC-11, Web Analyzer, it doesn't matter the product. When you put that unrealistic expectation in their head. You've now set them almost behind. Here's why I mean, because it's one of the 12 of why Forex traders fail. And we're actually basically giving them the gun. Okay, let me give you something real to give them and how to talk to a prospect. This is for builders, and then I'm also talking to my traders as well too, or both. Okay, so if you're a builder and you're looking at this, you don't have to oversell it. Guess what? The world provides this today. A regular person working on their job, first of all, mostly don't even have a retirement, or a retirement is failing. And mostly, if they do have a retirement, they've been sold on a 401k plan, on some type of hedge fund, or on some type of mutual fund or Roth IRA. Now, when you understand those financial vehicles, each of those financial vehicles yield no more than about 4% on a good year. Listen, folks, when we're talking about this same $1,000 investment, people are only going to get there's no one who can beat what IML is teaching people. Listen to me. I don't care what they got. So let's just talk about the 401k, Roth IRA, whatever it is. 4% per year is a good year. That's what every financial advisor is going to tell you. Well, we're going to diversify, move money around, get good growth of 4% to 6%. So what does that mean? That means I'm going to invest $1,000 in my Roth IRA or in my retirement plan, and I'm only going to get between $40 to $60 for the whole year. Okay? Let's talk about that. You know, this is mindset I'm working on right now. So that's $60 for the year divided by 365 days. That's getting 16 cents a day. Okay, sounds cool. But they had to risk 1,000 of their dollars. Now, when you understand how the economy works, do you realize there's going to be a recession or something that it's like a recession every 10 years? So that even cuts that 4% down even more. So your average person that you're around today don't have the platform like you have. So we don't have to sell them on getting thousands of dollars. I'm going to sell them on, I have a better plan for you not only to learn the knowledge about your retirement and how you can supplement your retirement better than what it's doing today, but how you can assure yourself because you are learning the knowledge on how to get more than 4%. So if I get more than 4%, I already went on top of what you got. So let's look at 1% now. If I show you how to turn 0.10, right? This means $1 per pip into $10 with one trade and grow your account by 1%. I'm already a quarter of the way of beating you to what you get every year. So basically, I go through 4 successful trades. Guess what? We do this on the Breakfast Club either in 1 day or in 2 to 3 days. This is going to happen in their first week. We're going to get them at minimum. We're going to get them growth, let's say, of 10% in that week. So 1%, boom, they make $10, $10. So let's say we get to 5 trades. They just made $50 on a $1,000 investment. Let's say their first week, they just now surpassed what they would have made in a year from their retirement plan. I don't have to oversell anybody. I'm going to show you a way that you can outperform your retirement plan in simple steps. And if you get really good, you can outperform your retirement plan 10 to 1,000-fold on your own accord, just with this skill that we're talking about. Not over leveraging, just focus on 1%. So now that we got that mindset out of the way, let's go through 30 successful trades, us using 1%. Okay, we took a $1,000 account, 30 successful trades. Let's say we knock this out in a month. Let's say we knock it out or this probably will be knocked out in a month. But as you start trading on your own, you probably can knock it out within less time. Being very conservative, you take your $1,000 account to $1,347. Some of you looked at that and said, "That's it." Let's look back what we're talking about here. $1,000 invested in your IRA, in your 401k would have only gave you $40, maybe $50 in a whole year. You just made $347 in profit with 30 trades in a month, or let's say even in a month and a half. You're outperforming your retirement plan now. We keep our money. Let's say we keep our money in there, and we work it down to 60 trades. Boom, now we turn that $1,000 to $1,816. This is 60 successful trades. We haven't even got, look, I'm still using a 0.18. I'm talking about long-term growth, folks. I'm talking about looking in the future, right? Now you get down to 90 successful trades, and you just turned $1,000 to $2,448, and you didn't risk blowing your account at all. at all. There was no way that you could blow your account with using 1%. You would have to stay in a trade for a long time. It would have to go negative for a long time. And I will tell you from experience now, it's rare that a trade can go that long unless you're trading the US 30 to blow your account with this type of percentage. Okay. So boom, you just grew your account to 2448. There's several things you can do here now. Now I like to play with market money. I've already replaced my income. You can take your $1,000 out, and now you can go back up here. Let's say you take your $1,000 out, you go back up here, you put 1,400, or you might say, I want to reinvest what I made. It was okay. So let's put 2,400. We still going to keep 1%. Okay. Now we up. We're using 0.24. Now, as you become more experienced, can you take these lot sizes up? Yeah, you can go to 2% if you want. Okay. You can start going higher, or as you get higher in money, you can take the percentage down. It's all up to you. Let's say we do 2%. Now we got 2,400, 30 successful trades. We are doubling our account now. Okay. In 30 trades, we doubled our account. In 60 trades, we doubled that account. So now we're at 7,874. And in 90 trades, we're at 14,000. Folks, if you were able to make this type of money from home, just pushing buttons conservatively without blowing your account, because that's the goal, not blowing an account, would it be worth it? So I'm going to tell you, like, had I understood and had the mindset that I have right now, at the beginning, I could have saved myself thousands of dollars. You see, I blew my accounts trying to make this money fast, when really all I had to do was I had to make this money, gradually. I could have, with the money that I blew, I could have really put 1% and grew this money gradually and been had a higher probability to have a large account with the money that I had started off with. And so if that's you today, just think of this. It's not a race. This is your marathon. And your goal is to be disciplined and really to just chomp down on your trading plan. So really all that I just gave you today, once again, the Academy gave this all to me. All this is, folks, is a trading plan. It's just me going through what I said I was going to do and stay disciplined about it. So I think that's it. If you have any questions, I'll answer them. But as far as the session, this is all that I do on a daily basis. This is what I do on the Breakfast Club call. And then throughout the day, I will look at the web analyzer. If it gives me an opportunity, I'll throw that trade in my trading group, and we'll go from there. So here's what I'm going to give everybody. You can this is not the high probability trade checklist. I will put that out there, but someone gave, I think if you text 555 888, I want to say, let me make sure that's it. You're going to get the web analyzer for the ECC-11 alerts, and you'll get instructions on how to enter a trade. Now, those instructions you're going to receive, they're not for the high probability trades. They're just entering a trade based off the M5 and M15. So it's not the exact technique that I use, but you will get a checklist. The checklist I just gave you is for high probability though. Okay, so let me look on my phone, make sure I give you the right number.
Yeah, you did, Randy. It's 555 888. Okay,
555 888, and then you're gonna put hashtag ECC11. Okay, you're gonna get a text immediately back with the web analyzer link for Telegram. So anytime those alerts come up, you don't have to be plugged to your computer. You get those alerts that come up, boom, alert came up. You can hop on your computer real quick, or you can have the cloud set up on your phone and you go through the same exact checklist. You're just going to use the entry point that the web analyzer gave you for that alert. And then throughout the day, you can trade using the web analyzer from those alerts. And then we might even have some things in the works. So we'll see if it's going to happen. But I think I'm working with Stephen Hooley possibly to have where it's going to alert us on high probability trades from the cloud. And if we get that, that's going to be powerful. Meaning, instead of us having to physically go look at a chart, the system will automatically give us those high probability trades to go into. Oh, the number only works for the U.S. Let me see if I can. If someone is on their phone looking at this, what you can do is go ahead and copy that in the chat, or someone will give it to you in your group.
What they can do, Randy, just inbox Mike and Marlene.
Okay.
I'm going to also put it in our Forex Mastermind chat, but you can definitely inbox me and we'll make sure you get it, okay?
Okay, perfect. I'll do that.
For all of my out of the country customers.
Awesome, I'll do that. Okay, perfect. So that's it with the spreadsheet there. Just got it, works perfect. Okay, awesome. Awesome, awesome, awesome. Okay, we are done here. I'll come back on the web analyzer if you need me to explain anything else. I can. If not, then our session, we're all set to go.
Thank you, Randy, man. I can't tell you how much we thank you, man. I know you have another call coming with your team,
Yes.
as well. So you actually went above and beyond where I thought you would be going, man. This is the training of training. Yes. And man, I appreciate you getting into the mindset of this. Also talking about the logistics and the specifics of, the checklist with the web analyzer, and just really sharing your heart and being transparent. So we really appreciate you and Wanda for what you're doing as leaders, and just keep knocking out the park. And I can't wait till you get back to South Florida. So we can link up.
Back.
Absolutely. We're going to be coming your way soon to Dallas, Texas. Hey, Randy, before you go off, man, talk to them a little bit about Dallas, Texas, and what that's going to
be. Okay. Dallas, first of all, this Dallas, Texas, I believe, and you're hearing this from all the leaders, it is the launch. Listen to me. We've been around for 6 years now, but it is the launch of iMarkets Live. And so just talking to you as a builder and as a trader, typically when you're in a network marketing company, you go to these events, they're tailored specifically for, the people building the company. But iMarkets Live, man, it's a beast of its own. For if you're a trader and you're on here, you're like, I don't need to be there. It's for people who are building the business. No, it's for everybody. If you are a trader only on here, you should definitely be at the event, because you're going to have live rooms. So instead of someone just telling you about what they do, they're going to physically show you what they're doing in person, and you can ask your questions eyeball to eyeball. Go meet your favorite traders, your favorite IML TV educator. Ask them that question that you've been burning to ask them about. So that's powerful there. That's going to happen on a Friday night for our IM event happening in September, starting September 13th. But then also for my builders, those who are building your organization. If your goal is to become a chairman, okay, listen to me. If your goal is not to become a chairman, then you might not want to listen to me at all. Like I said, it's for traders also. So if you are a builder and you really want to get this done, I'm gonna tell you like I've always known, like my mentor told me before. Builders, people who want to be successful, people who want to make thousands and millions of dollars, they don't miss events, because you need that coaching. At the end of the day, what we're talking about is all mindset. See, I was born and raised in a place called Compton, California. I did not come from money. My mom did not make thousands of dollars. We were in poverty, folks. So I knew, coming out of Compton, California, entering the military, I had to have some mindset changes for myself. The military was one of them. But when it came to making money, I had a bad financial mindset. In the military, I was not doing good things with money. Why? Because my background didn't prove to serve me right. And so I learned later, especially after entering network marketing, that I had to change my mindset if I wanted to change my bank account. And so these events are perfect times for you to change your mindset so that you can change your bank account. So what I will tell you, if you want to change and increase your bank account, you want to become a top leader in this industry, do not miss the IM event. Not only is it the launch of the company, because we have a brand new corporate team. We have some of the best that is guiding and leading our company, but you get to rub shoulders with those who are making $500,000 a month, $250,000 a month, $100,000 a month, and realize that they are just like you. If you're brand new on here, what I want to employ you is to go ahead and buy your ticket right now. Go to iml.events, purchase your ticket. They're only $147 right now. I hope that your life, I hope that your future, I hope that your career is worth $147. It should be no question about buying that ticket. If you were my brother and my sister, I would tell you, this should not even be a conversation. Book your ticket. Your life is worth it. I care about you. I love you. I want you to be at that event because I know in my heart that it's going to change your life. So I look forward to seeing each and every one of you there. The IM event happening in Dallas, Texas is going to be absolutely powerful. You guys have, some of the best leadership in the industry. Listen, I didn't say in the company. I said in the industry, folks. It was a pleasure and honor to meet Michael and Marlene Stouts at our last event when I was down in Miami. Such a transparent couple, such a God-giving couple. They lead with their hearts. I know that from first meeting them. So you guys have some of the greatest leaders in the industry, from the stouts all the way up to, of course, David and Manitier. You guys got it. You guys got the best already. So you have the blueprint. Follow the blueprint. How I became successful in network marketing. I became successful not by saying I'm going to do my own thing, right? That's ego. When I say I'm going to do my own thing because I want to make my own way. Why? Don't have to. Right? There's someone who's made millions before me. And so I'm going to humble myself and say, you know what? I'm going to do exactly what you're going to do. Because I'm going to do exactly what you're going to do, I fast forward the process because they have already went through the bumps and the bruises and the ups and the downs. Why would I want to go through that when they've already proven the system that works? So follow your leadership. Do exactly what they do. It's a game of follow the leader. And the person who can follow the leader the best is the person who's going to make the most money. I got good at network marketing because I had a mentor who was very good at presenting, very good at being in front of the room, understood how to build organizations. And what you guys are seeing today, me and my wife, you see us, sprint to Chairman 25, Chairman 10. Folks, it's none of my own accord. It was me playing an adult game of follow the leader in my last company. And that adult game of follow the leader proved to work in everything that I've done to this point. And so now that's all I do is I teach people exactly what I was taught. I teach them the same exact thing. And here's where we are today. So for those who are brand new, welcome. Excited about seeing you guys at the event. Hope you guys have a blessed, abundant rest of 2019, and let's go. That's my time.
Randy, man, thank you so much, fella. Appreciate you and Wanda. Looking forward to seeing you guys, if not before Dallas, definitely in Dallas. And, man, appreciate you so much. Thank you. God bless you. I know you did some transitioning, so I know that went smoothly there in Dallas. So just make sure you have a room for Marlene and I, okay? All right. So
have a guest room for you.
Thank you, guys. Man, that was just wonderful, guys. I'll make sure that I get this recording up. And Randy said a whole lot, man. We got mindset training. We got IML Web Analyzer training. We got technical analysis training. We got live training, right? And so we got a lot of training packed into this recording. And so much love to them. And I'm going to go ahead and sign out. And guys, we will be seeing you guys at the top. And we're not from the top, but at the top. All right. So love you guys. Thank you so much, Randy, for all you do. And guys, God bless.